Hey, Steve Saretsky here with the legendary Tom Davidoff.
Thank you very much.
Tom, always a pleasure. We just want to put together a quick video, basically summarizing kind of what we saw here in 2016, obviously as we head into the new year, and maybe some of the things that we're expecting, or maybe I wouldn't say predicting, but maybe some expectations and some things to look forward to in 2017. Obviously, there's a few reports coming out right now with the BC Real Estate Association doing their forecast for 2017 a couple weeks ago, and then Royal LePage is expected to release theirs in January. I know that they're talking a likelihood of double-digit price correction. That's kind of what they're forecasting. So we wanted to put together some tidbits on kind of what we're expecting, talk about maybe the first-time buyers down payment that just came out, and we'll go from there. So Tom, I guess maybe I'll let you go first. I mean, kind of what you saw in 2016. I know that we've worked together putting that pricing formula together, and I know you've pulled some data, some numbers quite recently. So
yeah, we've talked about it. I thought with limited data in the fall, maybe I made a coding error, but apparently some other realtors have confirmed something like a 20% drop on West Side single-family homes since the peak. Now, that only takes you back maybe halfway to where you were a year ago. So, look, everybody thought overseas money was a very important part of the story. We know in the spring we were into the double digits foreign buyers. When you think about foreign money in all its forms, probably in the 20s in March. And then we're up to 3 after the tax. So, you're pulling out something like 17% of the market. That is brutal. And, obviously that the 17% wasn't, or 20-ish% that we saw in the spring was not a normal level. It was accelerated. We know money was flowing out of China very rapidly. The loonie was extremely weak in the winter of 2015, 2016. So you combine an exodus of money with a weak loonie, and we had this massive surge in prices. Other stuff's going on too. We've had very low interest rates, a slowdown in supply relative to demand growth, so rents have really accelerated.
Do you have any thoughts on the interest rates there? I mean, obviously, like the States has hiked theirs. I mean, they're saying they're expecting 3 in 2017. Whether that actually happens or not, do you think like the Bank of Canada would potentially follow that? Like, where do you see them? I mean, I think that's obviously guesswork, but
well, rates have definitely ticked up since the election. I think a lot of that work was done most recently after the election, but then the Fed again raised rates, so they're optimistic about growth in the U.S. relative to where they've been. I mean, we're still at extremely low rates. We're looking at 2% on a 5-year in the States. The question is, how much of that is the real interest rate that the economy is going to be strong and people demand a decent return on their money, versus Trump's going to borrow a bunch of money, give it to rich guys who are going to save it just like they were before, so not really stimulate activity, but blow a hole in the deficit and generate inflation expectations. So if it's just inflationary debt in the U.S., that I don't know that feeds higher rates in Canada. If it's real growth in the U.S., I think it does. But then that leads to a distinction between what happens as a function of U.S. interest rates to the U.S. Canadian dollar exchange rate. I don't think the foreign buyer tax has extinguished foreign demand. I mean, when you look at $4 million single-family home prices, I don't think that can be driven by the local market, given what I've seen of local income distributions.
I think obviously it's slowed down. I think something to note that is obviously a lot of these high-end homes are still selling, and I don't think you look at the foreign buyer data, I think it's still like 6% in Richmond or something, which is obviously down from the peak of 25% when they first started pulling it. So, but I think it's still there. It's certainly cut back. I mean, how much more is going to funnel into it as maybe more and more news comes out that the Vancouver market's correcting. Obviously it's I think Vancouver, for the most part, for a lot of these buyers, it's used as a hedge.
Absolutely. I mean, I think there's a tremendous amount of uncertainty over where foreign demand is heading in 2017. But I think it's a factor. I think if you I said it before the tax came in, if you obliterated foreign demand and the expectation of growth of foreign demand, you'd be looking at a 25 to 50% correction. And what happens with that?
What did you say, 25?
25 to 50 was my initial response. And so I said, you're not going to kill foreign demand. So my initial prediction was a 15% reduction in price relative to what we would have had without the tax. Now the question is what we would have had without the tax, and we'll never know that.
Mm-hmm. Yeah, so I think, obviously you pulled some of the numbers. I've looked at the numbers. People kind of like to dismiss, average and median and say, oh, you have to go by the benchmark. And I've talked about it before, how much the benchmark can lag by 6 months. You can see that in some of these areas. I think, I looked at Vancouver as a whole. I think it was, up year over year or something. Now it's only up, the detached is only up, 2 or 3%. And the benchmark is still showing, 25. So there's just a huge discrepancy because there's a huge lag period. So I know you've sort of worked on an algorithm and what are some of the numbers that you found?
Well, again, single family I think is down 20% from its peak. Yeah. Obviously, still way up year over year. My recollection is townhome attached. The declines haven't been as severe as West Side single family.
What did you find in the townhouse and condos?
I'd have to look it up.
I think
it's negative. It's negative.
Remember
for sure.
You having townhouses down 7%,
yeah,
and then condos were at, I think you had 5 or 6.
No,
which is kind of exactly what I found. I said that the townhouses or the detached is the most, and I'm not a West Side detached housing expert, right? So but like I said, I'm not going to mention the guy's name, but it's a very prominent realtor in the West Side, and he told me it was down 20%, and so I think his word back with the data is obviously very, very concrete.
Yeah, and it's quite interesting. There's got to be spillover eventually, right? Because you're still seeing a nice townhome, even 1,400 square feet, selling for $1.8 million on the West Side. Now, you cannot have single-family homes with yards selling for, say, $2 million, and you just can't have only a $200,000 gap between house with yard and 1,400 square foot, somewhat depreciated duplex or townhome. So it takes time for these things to feed through the market. This guy YVR housing analyst who we find on Twitter has put together data that I had not seen, but is consistent with what you see in every market, which is when you see inventory start to pile up, that's when you get the price reductions. Now, inventory was piling up through the fall, but nobody lists in late November and December, and we're seeing the inventory get eaten away.
Well, I think someone was pointing out the absorption rates, saying oh, look at this. But the thing is, the reality of it is literally nobody is listing right now.
That's right.
And I think last I checked for November, I think the east side of Vancouver, for example, I think it had 10 months worth of inventory, which is a severe buyer's market. But that wasn't from an influx of, if you actually look at overall new listings,
they were down.
They were actually almost at historic lows. So it's telling you that nobody's really selling, but the thing is all these listings are backing up, making it look.
Exactly.
So I guess heading into 2017, my only concern is, I think you have what's more of a recency bias in terms of, these sellers, they see that the prices have gone up 50% in the last 2 years. A lot of them don't want to sell. But I think as more and more of these headlines come out saying, hey, Vancouver prices are falling, market's slowing, I think a lot of them, say, now's the time. It might add on to an active spring market where you get a lot of listings coming on. I think you might have maybe more than previous years adding on to, really, there's not a whole lot of demand on the detached side.
There's going to be more for sale in January and especially February and March than there has been in November and December. That always happens. There's life cycle issues. People like to time their sales with the school year, so spring is a busier time. November, in the States, they say between Thanksgiving and the Super Bowl, late November and mid-January is when you get the weakest part of the year for listings. Anecdotally, one hears, oh boy, I see a lot of homes getting renovated, probably for sale in the new spring season. It'll be interesting to see when the inventory starts to pile up again. But I think you're right. This is not a demand-driven reduction in inventory. It's a supply. And so should there be a lot of new listings in the spring, that's going to be yet another headwind for this market. And that, of course, takes us to completions. There's a lot of starts. I think 40,000 starts in Metro Van, which is
I don't know how
a
many of those
huge
are
number.
single-family.
Oh, no, almost none. But it's got, good point.
Actually,
let me dial that back a lot. Right. Sorry. Obviously, a lot of the permits, right? Certainly for me, I bike to UBC. I don't see any cranes. I probably get a skewed vision of it. But what I do see a lot is tear down and monster home. And I think that you do see a lot of that on the west side. The data I've seen, it's mostly in the metro area multifamily that's really surging.
So I think that we can basically we can both kind of agree that there's going to be an influx of inventory,
Yes.
specifically in the detached in the spring
Early
and the
spring.
new year. With, I would say there's not a whole lot of demand there right now.
No. Agreed.
And obviously these values have just climbed, enormously over the last couple of years. Like, I think you have single family homes in Langley up around 950 right now. You had South Delta hitting way over $1 million. I think Richmond's are at around 1.8.
Yeah.
So I think that for people earning local incomes to actually buying houses, I definitely see in 2017 quite a bit of a correction coming for continuing for.
Your statement about recency bias. I mean, you look for the most recent comp for the house that looks like yours, and the realtor will say, that's a reasonable price, or maybe try and get you a little bit down from there so they can get the sale. And as the sales don't happen, you've seen a lot of relistings. In baseball, we talk about the Mendoza line when a batter is hitting below 200. That's no good. Well, on the west side of Vancouver, we're starting to see listings below what I'd call the Mendoza line for the west side of Vancouver, which is 2 million. You did not see single-family homes below 2 million in mid-2016, certainly not for a transaction price, and you are absolutely seeing those listings today. So
I think I see a lot of that in other areas too. Like, I did quite a bit of work out in North Delta this year, but I couldn't find houses under 700 there for basically the majority of 2016. Now I'm seeing a lot.
Yeah.
So I think
we've talked about that. The drive to qualify parts of the metro area, the further you get out from the core, that's where you had first-time buyers, I think, sort of FOMO induced, maybe some investors as well. In response, I think, to the surge in foreign demand driving up prices, you had the locals doing Me Too, and if that all goes away, some people would say, this market could fall 30% plus. I don't think that's the likeliest outcome, but when you combine, the absence of the foreign demand, FOMO out the window, as people are not afraid of missing out. Probably, in my view, scraping the bottom of the barrel for new buyers, because I think anybody who wanted to get in, given the easy credit conditions in 2016, a lot of them probably did get in. You saw that in the States as you got to 2005, 6, 7. The quality of buyers in terms of credit, down payment, etc., got worse and worse. You're just marching down the demand curve. So that's a headwind. You got the qualification test on interest rates. Now you've got to qualify on posted rather than the actual rate. So that's like a 2% difference, which can really hit people on the payment test. That's on the first-time side. And you're probably going to be qualifying at a higher interest rate to begin with rates ticking up. So you got a lot of headwinds going into 2017. So it's no surprise. Royal LePage, I think Brian Hughes a little smaller with his forecast. I think low single digits. Then we got even Cameron Muir, who I think is a knowledgeable guy, but obviously somebody who people think, industry guy, whatever. He says -8.
Yeah.
So if you were going to pick a number as your best guess of where prices are going in 2017, it's not crazy that number would be below 0. But who knows, right? There's so much uncertainty.
What's interesting though is that I think obviously a lot of these guys that you just mentioned actually have totally reversed their assessments for 2017. I think earlier in 2016 they had completely different.
Well, I mean, the foreign buyer tax was like the nuclear bomb. I mean, who knew that was coming? So
you can't. It's really hard to predict.
If you don't revise your forecasts based on what's happening on the ground, then you're looking into a crystal ball. So I think they were absolutely right to correct. But then we've got new news, right? This provincial policy, which helps first-time buyers. Allegedly now you're going to be able to buy a place with 2.5% down. That may help some people who were not able to buy get into the market, and I think very intentionally that will, in some way, counteract the negatives. Now, Gary Mason asked, well, how could somebody say this is going to lead to an increase in prices given people are forecasting a decline in prices? But of course, that's just a logical fallacy, confusing the level of prices with what a policy will do to it. Prices may very well fall in 2017, but if you push people who don't have the ability to buy a home into buying, all models tell you that tends to push up prices. And so relative to what we would have seen without the first-time buyer credit, the home or was it the home loan program, he's calling it, or home partnership, relative to a world without that partnership, I think the condo market will suffer less than it would have. That doesn't mean it won't suffer. It means it'll suffer less than without the policy.
Than what it should have. Yeah, no, I agree totally. I think obviously, you're stimulating the market with a little bit more demand, and it's already supply constrained. But I do think that I think it's a lot of the same thing with the detached side. Is a lot of these sellers have made. I mean, you go to say Abbotsford, which I've highlighted a lot because I think it's bizarre where you look at it in a long time period, 5-10 years. Historically, they've been very, very fortunate if they broke even. In fact, most sellers, owners of those condos, lost money. Over the last 8 months, they've gone up 31%. So, and you need to look at it, of course, inventories there is at record lows because when sellers see same thing in Abbotsford, sellers go, oh my gosh, all of a sudden I've made 20-30%. Why would I sell? So, and I think that I think it's just a fallacy. I think that's once that market starts correcting, I think that'll add on more inventory. I certainly don't think that the condos and townhouses will see a correction in the detached, and especially given that Christy Clark's new loan program. But
well, the interesting thing is speculators. I don't know what fraction of buyers in the market are speculators, and when I say I don't know, I mean I really have no idea.
I don't think anybody knows.
But if you have a market driven in part by speculators going in, and speculators tend to be maybe people who like to play trends.
Yeah.
If you start to see prices ticking down and people who were going in and driving up prices head for the exit and dump inventory, that's going to be a real problem. Now, we have a lot of starts in 2016. I don't know that we're going to have a ton of completions in 2017.
It could be 2018.
So, the question is, when do we start to see significant numbers of pre-sale buyers looking to exit their positions? Some of whom maybe need to get out to avoid paying the 15% property transfer tax if they're foreign buyers.
I'd like to add to that quickly, actually. I think there's a lot of maybe unknown about it is actually, even though these people may have gotten pre-approved for a mortgage or qualified when they made their pre-sale purchase, they actually have to go get requalified again upon completion. So a lot of these people, are going to have to get reapproved at whatever the rates are going to be when they go to complete. I mean, who knows where they're going to be in 6 months, their financial position. If property values come down, say 10-15%, is the bank going to loan you the full amount that they originally said they were going to?
Yeah, nobody wants to give up a 25% down payment if they were actually required to make a 25% down payment. And in these friends and family sales before the pre-sales, I don't know what people are putting down.
Yeah, it's usually about 20%.
Yeah,
but the thing is,
but if prices are down 30 and you don't have the down payment, you're not going to complete.
Yeah, so you just try and offload it.
Yeah.
But I think 2015 actually had record starts too.
Yeah.
2016 beat it.
No.
So I think usually about 2 years. So 2015. So you could see some completions maybe at the end of 2017.
Yeah, and then there's anticipation. But certainly if we see a lot of pre-sale stuff going back on the market, that's going to be yet another headwind.
Yeah.
So again, a negative point estimate I think is totally reasonable. Is there a possibility of a catastrophe? Absolutely. Could the Liberals get reelected? Get rid of the foreign buyer tax to stabilize things, see a new flood of money in from overseas? Is that a possibility that leads to a positive for 2017? I wouldn't rule it out. And the world is going in a funny direction, I will say. I mean, I think people, what does it have to do with Vancouver housing prices? A stable democracy that's beautiful, that's supply constrained, that's looking very, very attractive. So I don't want to rule out a pretty rosy future for prices.
Well, yeah, always. I think long term, always Vancouver, right? I mean, but I think definitely in the short term, I think there's a potential for a lot of turmoil. I think it's obviously it comes down to how the public's going to start interpreting the stuff. My only concern is obviously we're starting to get a lot more negative headlines coming out with media saying prices are going down, sales are down 50%. There's just a lot of negativity, whereas I think 6 months, a year and a half ago, every headline was telling you prices are going to go up. Every economist was forecasting prices to go up. Everybody wanted to jump in, and it's created this mass, fear of missing out. And so I think a lot of that has been reversed. So how much of that will play on to the market. How much of policy changes, is Christy Clark and the government going to, like if things start to correct more and more, like you said, do they remove the foreign buyers tax to maybe re-stimulate the market? I mean, she keeps talking about she doesn't want to tap into ruin people's equity in their home.
Yeah.
I mean, how many homes did I think she owns 5 or 6 homes herself. So Mike DeYoung owns 8.
Yeah.
So I think they have a vested interest to kind of keep the market, at least somewhat propped up.
Well, the foreign buyers tax, people were very upset about rising house prices, and I understand that, but politically, nobody wants to preside over a home price crash. Yeah. And politicians, as we've seen, clearly have levers that can influence the direction of prices. On the other hand, there are some things that are out of control of the province. Interest rates. If we, when I first bought a house, and I'm not an old guy, my realtor told me, if we break 7%, that's going to be really important psychologically. Well, here we are in the mid 2s. So it would not be crazy at the end of the year. We could be in the 5s. I don't know that that's the likeliest scenario by any means, but there's nothing the province can do about interest rates, nothing. And that would really, I think, be devastating if rates were to jump. Not much they can do about that. China's currency, some people think is at risk. Remember last year, about a year ago, we were at 4.5 yuan to a loonie, and we're now at 5.2. Now, we've been in the 6s and 7s historically, but there is a real concern that people are going to continue to take money out of China. There's a lot of concerns about the economy, excessive debt. I am not a China macro finance guy. I don't know that there's going to be anything other than significant growth going forward in China.
Currency wars going on there.
Oh, and of course, Trump risk. Who knows what will happen with the yuan if Trump gets serious. On the other hand, Trump could decide to get serious with Canada. Yeah. And then the loonie weakens. And I do think a weak loonie... I look at the loonie relative to the yuan as an important indicator of where the market's going to head. It's been pretty flat for the last few months, but I think movements in that currency are also going to matter for the health of the market.
Interesting. So I guess kind of summarize the 2017 predictions. I don't know if there's anything else that you want to add, sort of thing.
No, I think it's going to be a fascinating year. There's a lot of uncertainty over where things are going. We've got a provincial election that matters. And Christie has told her supporters, don't count your eggs before they've hatched. And conditional on the Liberals winning, I don't know where policy goes. If the NDP wins, we might see more serious efforts to make sure that it's local money driving housing prices here. And I will say, if this was purely a locals market, you ain't seen nothing yet. For home price declines.
Yeah, no, I agree. I think I'm just happy that we've been able to document this, because I think regardless of the outcome, I think this is going to be a case study for years. I mean, the way that prices have gone up, the foreign buyers tax. I'm sure you're the same, but I've done interviews with news companies coming over from New York and China and all these, it's got the national attention right now. So.
I thought I'd seen everything living in California for the mid 2000s, and that was quite interesting. And it's interesting because I teach mortgage default a lot. I teach mortgage finance. I'm like, let's talk about workouts. Let's talk about valuing mortgage insurance. I just put out a study indicating, according to market prices, this new home partnership from BC could be costing 25% of the value just in foregone interest and default costs. Yeah. And I sort of thought, what do my students care about default? Prices are going up. They've never seen a default. Why would they find that interesting? Well, these things circle back, and it'll be very interesting to watch. If things go very far south, I don't think it's that likely.
Is that something that maybe concerns you about the first-time buyer's loan?
Oh, yeah. In two ways. Number one, you don't want to push people who aren't ready to buy into buying. In the U.S., there was this real push, low-income, low-wealth households. We got to get them into the American dream. And, of course, Wall Street got in on the act in a very big way. And in fact, I think today minority home ownership and poverty home ownership is lower than where it started at the beginning of the subprime. And that means people put money into homes, maybe not too much down, but something, and then lost all their equity. So
the wealth divide.
Yeah, pushing people who aren't ready into ownership, it's complicated. Because, people your age, everybody struggles to make a down payment, especially in an expensive market like Vancouver. And helping people get over that hump And the only reason there's a down payment hump is that the bank won't give you 100% LTV because they know that puts you at default risk.
Yeah, totally.
If you could promise to the bank, hey, I'm a good guy, I know there's recourse to my other assets, I'll never default. If you could commit to that, I have a colleague, Ron Giamarino, who likes to point that out to me, and I think I have to give him credit. It's a valid point. It is a real obstacle that it would be nice if it wasn't there. You know, if BC wanted to say, we'll lend you the money, but, you know, we have access to your future tax payments and social insurance. If you default, we're going to get the money back.
Yeah.
You know, that might be a nice way, because then decent people who plan to never default can commit. I know I'll never default, and that makes the money cheaper. In that case, provincial money's cheaper, but with no guarantee. In the U.S., the Federal Housing Administration lost a lot of money on high loan-to-value loans. So getting the government into the business of sort of non-prime lending, that's not an unambiguously good idea. And as we said, especially in Vancouver, where, you know, it's basically the permitting game that decides how many units get built, you know, adding more fuel to the demand fire is not the way to get to affordability.
Yeah, no, I agree with you. So 100%, Tom.
Well, yeah, I guess last thing will say, you know, everybody's been talking about housing affordability as the game. It will be interesting. If prices start to seriously correct, the conversation will be very different, and it'll be about how do we sustain a floor on prices rather than squish them down. I don't think that's where we're heading, but
how many levers can you pull?
Yeah, well, no, you know, if rates jump, the yuan crashes, it's going to be an ugly 2017. Not the likeliest outcome, but definitely one that could happen.
Okay, I heard it from this guy first. So that's the 2017 what to look for. Anyways, hope that helped. I would say to add to that, I think to give a really good sense of where I think maybe the market is heading, I think March and April could be some really interesting months. Like I said, I think that's when most of the inventory comes on, and I think that'll give you a really good picture of, you know, the busiest time of the year for real estate generally. You know, how does it look? And I think that will paint a really good picture.
Well, we'll do an end of quarter one summary, see where we're at.
We'll do this again.
Well, see everybody. Thank you.